We can set something up, and I can do the trading for you, and we split the profits. That's what I do. I'm a hired gun. I trade for many clients, and this is what we do. So there's no reason why any of you should be struggling financially or depressed because you can't find a job because you've been laid off and your unemployment benefits have run out. It doesn't take a lot of cash to do what we do. You know, it's better to make $1 a day than to make nothing. So if all you have is a couple of $100, you can still be in the game. I can show you how to do that. Just be encouraged and stay tuned for more to come. On a final note, I just want to show you what's happening with the markets overall. If you take a look here, you see we're barely positive in the Dow. We're up 4 points. In the S&P right now, we're up just a point, and in the NASDAQ 100, we're up just under 7 points. And one thing to note here is your oil. There's been a lot of talk about oil in the news as far as what's going on down in the Gulf Coast. Well, oil has been following the Dow. I mean, that's what you see. We are bearish. We're way below the long-term trend line. So your resistance now is at $109.10 a share. And even if we get up and touch that, very little chance of breaking that unless something else happens. Supply and demand is what this is about. For whatever reason, oil is following. It's been pegged to the dollar instead of the gold standard. You know, we're on the oil standard, so if the dollar's getting crushed, and so is the oil prices. It's weird the way this is going. I don't make the rules. I just trade the markets. Looking at the U.S. dollar index, I want you to take note here of this. We're at $24.41 a share now on this. This is also extremely significant for you to take notice of because we are in jeopardy here. This is a well-established downtrend channel. If this channel continues, then we could be setting up a really dangerous bear market in the U.S. dollar. If that happens, then that means that you're going to see the euro dollar, you're going to see the pound, you're going to see the Australian dollar, you're going to see those start to skyrocket. And if that happens, then it might take the gold and silver market with it, and it could rally also. So as this dollar falls, oil and the stock market will fall. And we should, if the markets are behaving correctly and they're not manipulating them too much and decoupling them, then gold and silver should rally once it gets out of its consolidated trendline support area. Here's your GLD. A lot of people have been following this. Make no mistake about it. The GLD is still bullish, but we're at a crossroads. We're in a consolidation cloud. You can't see it on this chart. You can see it in my system charts. I don't have that up at the moment, but here you can see it in this one. It's very clear that we pulled back, testing support. We need to get out of the Kumo cloud. Let me see if that system is up yet. Okay, looks like we do have it up now. Okay, you can see this now a lot better. I'll make it bigger so you can get a better view. Okay, you see here, we're now well in the Kumo cloud here. This is a bullish Kumo cloud, so we have a bullish pullback here. And let me just run down the technicals for you a little bit so you can get an idea of what I'm talking about. Looking at the swing index here on the GLD, the market pulse is negative since it's trading below its zero signal line. The pulse scan crossed below the swing VIX, creating a downtrend channel as of 11 periods ago. You can see that here. And the swing VIX is below -29. This is where it usually forms support. The swing VIX usually forms support before the underlying security. The last signal was an overbought sell 37 periods ago. The swing VIX has just reached its lowest value in the last 14 periods. This is bearish. The swing VIX has set a new 14-period low while the security price has not. This is a bearish divergence. Since the last swing VIX signal, this ETF price has decreased an amazing 3.49%, and it's ranged from a high of $123.56 a share to a low of $116.10 per share. Looking at momentum, currently the trend is bullish Kumo consolidation, possible trend reversal to downside bearish breakout. So we are still bullish the long-term trend, but we are in a bullish Kumo cloud. This is a Kumo cloud consolidation once we are trading in here, which means we're in danger of a possible trend reversal and a downside bearish breakout, which means we could trade below here of $114.29 a share. If we close below that, then as you can see, we're falling off of a cliff. All right, so we'll have to watch that in the coming week. The close is currently above its long-term period moving average of $106.19 a share. Our bull market uptrend price target for GLD is $158.30 per share. Our long-term trendline resistance is currently at $123.56 a share, and our long-term trendline support is currently at $88.82 per share. As for volatility, we closed above the lower band by 10.4%, and we have no buy or sell signals at this time.